Good morning, one and all. I hope you are well, and I hope that you had a great weekend. So, I am back with another one of these videos, and I have three pairs on watch today. Those are Euro Aussie, CAD Yen, and Pound Aussie. So, the one that I think is likely to be ready the soonest, although all three of these, in all fairness, could be ready tomorrow or later in the week, simply because of the fact that it is currently a bank holiday in the United Kingdom and the United States, I believe. So, we're likely to get lower liquidity as a result of that. But as I've said before, it's again another example of the tortoise and the hare. We stay sharp regardless of whether there may be low liquidity or not, because you never know, things shape up a little more quickly than we might anticipate sometimes. And then if you miss a trade because you were asleep on the job, to coin a phrase, then you can be, if you're not psychologically wired correctly, you can be affected by that, and then you jump into the next trade, which you shouldn't jump into as a result of you missing the previous trade. So it's all a big, can be a big snowball effect and a big spiraling sequence in trading. But without going too far down that rabbit hole, let's break down these pairs. So Euro Aussie. Okay, we've not really responded from anything to the left. However, we have had this strong impulse down. You can see an impulse correction and a potential continuation, maybe to retest the back end of this. So we have all of this volume here. We could be coming back down to retest this before we move to the upside. We don't really need to know because that's the super high time frame. What I can see, the bit that I'm interested in, is that we've had the pushes down, impulse correction, continuation. Okay, and we have a daily high here. Okay, so when we have this takes a long time to form. For something to form, to take this long to form and be this deliberate, it's quite intentional for a move to the downside. Okay, so we have the high here. We've tapped into that move to the downside. I am mindful of the fact that on the daily chart, at least, we haven't actually retested the back end of all of this volume. This candle here may have done it on one of the lower time frames, but so there is the possibility that we could come up to test that, retest the back end of all of this, and then drop. However, if you look what's happened on the daily, okay, we have tapped into this area and we have that kind of evening star formation. Okay, so it's a higher time frame evening cut star formation after the tap into an area of value. And on the 4-hour chart, the other clue that makes me think that we may be pushing to the downside from here is that we also had a reversal structure. We had a reversal structure into this area of value. I would not be looking to get short within here, because if you look how we push down, okay, it's not typical that we do that and then create more volume after just tapping into some. However, we've now broken out of all of that. Okay, one of the things that why you wouldn't want to be trading in here is because this could easily turn into a bull structure like that, and you get tagged in and tagged out unnecessarily, and then price moves to the upside, to start tapping into some of these highs here. But we've broken the lows of this structure now. We've done so impulsively. So that gives me a clue and reason to believe that potentially we could be forming a structure here, which ends up, just get that off the chart a minute, which ends up retesting. So if you look at this here, so we have all this volume here. The base of it, the start of all of this volume is here. Technically, we have tapped that ever so slightly, okay, but not by a significant amount. And if you think, once again, this is always a good thing to do. If you think to yourself, where would the stop losses likely be? If price is going to move to the downside, where are the stop losses that it would likely need to trigger to move it to the downside? Well, if people believe once it's broken below that all of this now, or the base of this, or even these lows here, act as resistance, where are they likely, the people who sold here, where are they likely to have their stops? They're likely to have their stops just above here, if they're looking at that as resistance, or above these highs, these lows rather, if they see that as resistance. So that could mean that what we end up getting, and one of the reasons, if we just look at this on the 15-minute chart, we keep having little gaps, okay, to these highs here, and then we keep pushing back up. So that's given me a clue that what we could be forming is what are we looking for, which likely won't be ready by the end of the day, but could be, theoretically. And I'll be looking for something like this that potentially taps into. So I'll be looking for a 1-hour structure. So a structure that I can see the structure of on the 1-hour chart. I can see that kind of starting to form here. And if we get something like this, and if ideally, what I'd like to see is something like this, where this touch kind of wicks above, wicks back below, and then that wick retests the back end of all of this, because then we would likely have washed out all of the stops that are in this area, or enough of the stops that are in that area for price to move to the downside. And then I will be targeting, we have a sharp move here and we do have a lot of volume, but if we were to get that and to push down to here, then we would have retraced about 70% of this move. Okay, so if we've retraced 70% of that move, it's likely the case that this is not going to hold, and we're likely plummeting all the way down to here. Okay, and then this whole thing just becomes one big V shape. Okay, which we see a lot. We get that move to the downside, and I would set a take profit down here at the 90% range. So I'd measure from here to here, set the take profit at the 90% area, and let's see how that lines up. I'm just measuring from the impulse to the correction, and then if we measure it again from the break, that would take us more or less down to the area anyway. So that makes some contextual sense as well. So I've got an alert set just below this high to see if we push up and form something like what I've just described. And if we don't, I'm not going to be looking at this pair. So that is Euro Aussie. We just move on to CAD Yen. So CAD Yen, if we just zoom out. So what we do have, okay, I'm mindful of these wicks here, okay? So this could be a long play and it could be a short. That sounds like a get out. It's not. It's me being neutral enough to know, okay, well, there are two sides to this coin, potentially. What am I looking for in each scenario, okay? So what we have, I'll be looking for the shorts today until the market shows me otherwise. And if it does, I know what I'm going to be looking for the longs as well. Okay, so we have this kind of structure here, which kind of retests the back end of all of this. Okay, and we've moved to the downside. Now, this high potentially holds a lot more weight here, and the retest to the back end of this potentially holds a lot more weight than this low, okay? So I'm not necessarily convinced at this moment in time that this is just going to rocket to the upside, although we do have on the slightly lower timeframes, I believe, a bit of a gap here to a high just above, okay? But the higher timeframes usually hold more weight. So what this could be is an impulse correction continuation to push lower to take out some of these gaps, which you'll see as I drill down. If we just zoom down. So we've had the impulses and corrections, impulse correction continuation. We had another one here. Now, the bit that I'm interested in for the shorts, so there's the gaps that I was talking about. So we have reason to come to the downside. However, we also have reason to come to the upside as well. Okay, so what are we looking for? If we just analyze these structures a minute, so we have that correction there. This comes up and retests the back end of that, so that's potentially completed. We have this structure here. We have a little scoop double top. We drop, so that's potentially one piece of its own. We then have initially I was looking at this as a potential short play. We wick to the area, and a lot of the time when we wick to an area, we fill that wick. Okay, we've done the same thing again here. When we get a wick where none of the wick actually breaks above an area of value, it's usually the case that we push back up. And again, if you think about it, all the people that were selling here, where do you think they likely had their stops? It's likely the case that they had their stops just above here, okay? Especially as people are too zoomed in a lot of the time, and this is more prevalent on the 15-minute chart. So that makes a lot of sense. So we've come back up to the area. So what I'm going to be looking for is very specific. I'm going to be looking for price to, now that we've tapped that area a couple of times, I'm not looking for price to just do what it's doing now and just move like that, because potentially you got to remember, each time we tap that area, we almost tapped it there, we're potentially taking out a lot of the liquidity. So that potentially means there's less there unless the stops are sat just above. So if we were to get something like that, this is where you could get tagged in and tagged out again, especially as we built a little bit of volume there that is visible on the 1 hour chart. You could be tagged in, tagged out, and then this ends up becoming the bull structure to push higher like that. So what I'm going to be looking for very specifically is I'm looking for a break above, and likely if we did get the break above, we would also tap these highs as well, which would be even better. And then I'll be looking for a push back down followed by a 15-minute continuation, not a 5-minute. I'm looking for a bit more deliberacy, partly because we have that above, although we could tap that, but also partly because we've actually tapped that low, which could act as given that we've got this, a reversal structure to push higher. So I'm waiting for slightly more deliberacy, and I'll be looking for a pushback down, followed by this flag, and then I'll be looking to get short, and I would target this low as a first target, and then I'll be targeting this gap to that low as my second target. And you might be thinking, well, what about the long? Well, the question I ask myself is, if there's a potential long in play, where does the short play become invalidated? Well, the short play becomes invalidated, in my opinion, if we break above all of this. So all of this correction, if we break above all of that, and then we form a correction like that, which is where I can see the correction on the 1 hour chart, I would actually look to get long there, okay, because we would have broken out of all of this volume. That would be the market. This would be the market saying, I did not find enough volume, enough stop loss orders here to send price to the downside. Which means there's a change in sentiment, okay, and then I would look to get long with a risk entry, and I'd be targeting that high there as a first inflection point, and then that high there, given that we have a high sat there where there was a sharp runoff last time around, which broke through all of this volume, okay, and we near missed to it. So potentially this could be just a reversal structure that taps into that, and then we complete this structure, this 1, 2, 3, okay, because of that gap that I just showed you. So we would take all that off, but the reason I've not got that on watch is because that likely wouldn't be ready by the end of the day. We would need at least another 1 or 2 candles, and then the 1 hour correction would take 6 to 8 hours to form as a minimum. So therefore, that would take us to the end of the day. Okay, but I'm going to set, just with that in mind, I'm going to set another alert there just to see if we break above that. So I know what I'm looking for. So a lot of the anxiety people feel in trading is caused by the fact that they don't actually know what they're looking for. I look at this and it takes me literally a few seconds to know what I'm looking for. And, that's going to give you a lot more confidence, particularly when you're trading large amounts of capital. I'm still on the smaller funded account at the minute, assessment account. But when I get to that stage, I know I'm going to have a lot more confidence because I know what I'm looking for. I don't know what the market's going to do, but I know what I'm looking for. Big difference. So that's what I'm going to be looking for from CAD Gen. This is another good example of what I was talking about wick fills. So we do have the gaps here, okay? We have gaps that could potentially be taken out, okay? We have the higher time frame structure, but I'm interested in this at the minute, right? So we have the gaps to the downside which could be filled. However, and we have that bearish candle there, but the question I ask myself is, what did it tap into? It hasn't really tapped into anything, because if you say that it's tapped into this, well, we've tapped into that 3 times. We tapped into it there, we tapped into it again, we tapped into it there. So if price was going to move to the downside from here, it doesn't usually tap something 3 times, right, and significantly break above each time and then start moving to the downside. That's suggesting to me that price did not find enough liquidity at this hook point to send it to the downside. And also, as another reason for it to go higher, we also left a gap to this high, okay? So we've gapped to another, area of inflection, if you like. And we've moved down. If we just look at this, we also have the gaps on the higher time frame, I believe. It's not a very significant one, but we do have a gap to that high, which this high left there. But this is the key thing for me, right? And another idea for the potential long is that what we've done here, we left a gap to this low. If people are buying here, where are they likely to put their stops? In here. We've moved down to this area correctively, suggesting exhaustion. Look what happens. We tap the area, but we don't break below it, and we seem to be pushing back down. When you see, very specifically, when you see a candle like this, especially a 4-hour candle as opposed to a 1 hour, when you see a candle like this that closes, where it rejects the area, as I just said on one of the other pairs, where you wick to the area but not through it, okay, that is a very, very strong indication, especially when it's bearish like that as well, that we're going to come back down and fill that 4-hour wick to basically take out this low that we wick to on the 4-hour chart before pushing up, if we are going to push up, right? Especially when we have the gap to that low as well. So all these things are little confluence factors that are stacking up. So what I'm going to be looking for with that in mind, once again, I'm not looking for a tap into that area because we've already tapped into it. and it doesn't make sense to me at this time to just tap it again and then push up, especially if there's still orders down there, which is what this price action is implying. By this point, I would want to see, if we just tapped it again, I would want to see a significant break above like all of this, and then a correction to confirm there's not stop loss orders down here, or that we've taken out enough orders just by tapping this area for price to be able to get long. Until that happens, then what I'm specifically looking for is a break below, followed by an impulse up. And by that point, I would be happy with a 5-minute risk entry, because there's nothing on to the left to worry about after that. There's no inflection points. If you look at it, this is a completed structure. You can see there, middle section, very clear structure. Okay, so that's what I'm going to be looking for. A break below, specifically, a push back up, and then a 5-minute continuation. And then I will be able to manage it up to here. I personally would be targeting the high above, because by that point, it doesn't make sense for me for price to stop there and just reverse, especially when we have that little hook point set above. So I think it's highly likely at that point that we would start taking out that high. And then if you just measure, if you look at this impulse here, this impulse correction continuation, that would likely complete the move. And we would also likely be, this could end up being a reversal structure where we get that. Okay, and this becomes like an expansion, but we don't need to know. All we need to be able to do is get in safely and manage our risk. So that is the 3 pairs. That's what I'm going to be looking for. You can see price appears to be, you can see that's what I was talking about the wick for. We get the push up, we get a structure that started to form, and then price just suddenly drops out. The reason this failed, and the reason that people probably got trapped into the longs too early, if we are going long, is because of that 4-hour candle where we wicked to the area of value below and not through it. Okay, so this here was like a trap to get people into the buys too quickly. And what a lot of people will say to themselves is, "Oh, that was market manipulation." No, it's not. It's you just don't understand price action yet, and that's fine. That's why these things take a long time to learn. But anyway, that's what I'm going to be looking for today, folks. I hope you're doing well, and I bid you a great rest of your day, and I'll speak to you again soon. Adios, amigos.